Hello and welcome back to another episode of Majlis and Markets. I am your host Hassan Jivraj. In this podcast, we bring you insightful conversations with influential leaders in Islamic and global markets. Before we begin, wherever you're listening to us, remember to like, share and subscribe. Get in touch with us also by sending us an email at hassan@majlisandmarkets.com, and be sure to follow us on LinkedIn at Majlis and Markets. In today's episode, we're diving into the Gulf's real estate markets. Dubai's real estate market has surged over the past decade, driven by its strategic location and luxury demand. Abu Dhabi is also advancing, and even smaller emirates like Ras Al Khaimah are attracting attention with new projects. Saudi Arabia is also a major focus, with Vision 2030 transforming the real estate landscape through NEOM's futuristic cities and ambitious homeownership goals. To explore these trends further, we spoke with Faisal Durrani, partner head of research at Knight Frank MENA, who brings over 15 years of global real estate expertise. In our conversation, we discuss what makes the UAE and Saudi Arabia standout destinations, their challenges, and the growing role of ESG in the sector. Faisal Durrani, welcome to Majlis and Markets. Great to have you on the podcast.
Thank you for having me, Hassan.
Faisal, you've got an interesting background. I've done a bit of research before this conversation, and real estate is an interesting area. I think it's a very important area in the GCC and other Middle Eastern markets. But before we get into what's happening in the UAE and Saudi specifically, I really want to get a take on your early life and how you got into real estate and real estate research. Could you give our listeners your background story?
Sure. Well, look, I was born and raised in Dubai, given the transformation that's taken place in the UAE over the last 30, 40 years, it was impossible to avoid being pulled into the real estate sector for work. Here I am about 15, 20 years later, still in the industry and still enjoying it very much.
Fantastic. And then you started off at Knight Frank, or did you go somewhere else beforehand?
Well, my first job was at a business called Clutton's in the UK, where I was head of research, looking after the London residential market initially, and then that broadened to cover Africa and the Middle East. I was with them for almost 9 years. And then moved to Knight Frank, where I've been ever since. In this current role, I've been looking after the Middle East and Africa for about 3.5 years. And prior to that, for about 2 years, I was looking after our London commercial research function.
Fantastic. And Faisal, before we get into the specifics, what does your typical day-to-day look like as someone researching real estate in these markets?
Good question. Well, no 2 days are ever the same. I'll tell you that. The majority of time, I would say, is focused on addressing client requirements. So whether it's providing strategic advice on what to build, where to build it, when to build it, how much to price it at in different markets, covering all sectors, from residential sales to commercial offices to warehousing. Covering markets across the very dynamic real estate markets of the Gulf. Alongside that, it's probably dealing with requests from the media who want to get a better understanding of our latest views on the markets, on prices, our forecasts, our expectations. And of course, working very closely with our research team that we have at Knight Frank MENA, which is spread around the region. We've got analysts in Kenya, in Egypt, in Jeddah and Riyadh, in Saudi, and of course in Dubai as well.
Fantastic. Faisal, when we look at the real estate market in places like the UAE and specifically Dubai, I mean, it's a very important part of the economy over there. It's gained prominence, I would say, in the last, 15, 20 years. But if we look at it today, do you have any high-level thoughts of where you think the real estate? Let's start, I guess, with Dubai, which is the most famous one. Do you have any high-level thoughts on the Dubai real estate market at the moment?
I think with the Dubai real estate market, I think we often forget that it is quite a young market. Of course, international buyers were only permitted to own real estate in Dubai specifically back in 2002. So we've got a market that's about 22 years old now. And over that time, we've been through two full property market cycles. And by that, I mean we've had peaks and troughs in terms of prices. And of course, each peak was slightly higher than the previous one. We're currently in our third freehold residential market cycle. We've entered the fifth year of price growth at the moment. And I know it sounds cliche, but no two cycles are ever the same. And this time round, the drivers behind the dynamism that we see in the market are very different to what we saw previously. And the fundamentals, particularly around supply and demand, are very, very different. So in terms of forecasting the market at the moment, it's extremely challenging when you have such a young market because, if we were to build a model, models are inherently backward looking. And with a market this young, it just wouldn't make sense to rely on a formal econometric model. So we approach our outlook for the residential market in a slightly different way. We analyze the individual KPIs that drive house prices, and then we have a consensus view on that. And I'm pleased to say that last year we were not too far off our expectations. And we do this only once a year, so we'll be revisiting our forecasts for 2025 come November. Hopefully we managed to get it right again.
If we stick on the residential sector just for a second, in Dubai specifically, what factors are driving this? I think, there's been a lot of, up until about from 2014 to say the Russia-Ukraine conflict in 2022, I used to read reports a lot back in the day saying like, there's a little bit of a struggle here and there. But it seems like since 2022, and obviously with the post-pandemic and then Dubai Expo 2020 helped the real estate market over there. Like, what are the factors driving the residential market in Dubai?
Okay, so just in terms of this current cycle that we're in, the sort of upturn in prices actually began in March 2020. So just as the pandemic was starting to unfold, we actually saw house prices begin to rise. So that was the beginning of this current market cycle. And there are several factors that have underpinned house price growth ever since. I mean, I know it seems strange to use COVID as a benchmark now, given that we're 5 years on since the outbreak of COVID-19, but the way in which the UAE government responded to what was an unprecedented black swan event helped to instill a significant amount of confidence in the market. And when I speak of confidence, that is something that's pretty intangible. It's hard to gauge how confident people feel, but in an emerging market like Dubai, confidence plays a significant role in driving economic activity and also real estate market transactions. And here we are 5 years on from the start of the pandemic, and we're still benefiting from that amazing response by the government, rolling out every possible vaccine they could. And of course, Dubai only had one single 6-week period of lockdowns or quarantines. And then life was pretty much back to normal. And that wasn't the case for many, many other places in the world. And look, aside from it being a feel-good factor, if we take a look at things like the PMI readings, these are a gauge of how confident businesses feel about their own growth prospects, as well as the health of the local economy. And if we look at how that has done over the last couple of years, that reading has been in positive expansionary territory now for well over 2 years. And in fact, in February, Dubai's PMI reading was the highest for any city in the world, and it was underpinned by job creation rates that had hit an 8-year high. And look, aside from that economic positivity, we've got residential real estate in Dubai that is arguably some of the most affordable. That Dubai offers arguably some of the most affordable luxury residential real estate in the world. If we think, for example, at our prime residential markets, you can get about 980 square feet of prime residential real estate for about $1 million US. And that's 3 or 4 times more than you could get in New York, London, or Singapore. Um, and these factors combined alongside the changes to the residential visa regime, the availability of visas that allow and encourage people to come and live and invest and work in Dubai and the UAE have also played a big part in boosting the city's appeal amongst global buyers. And it has turned into a second homes market as well, which is very different to previous market cycles, which was underpinned by speculative market activity. So these factors combined has underpinned house price growth, and that is why we continue to see house prices climbing, even though we are, as I said, 5 years into this current cycle.
And Faisal, you think like the buyers buying this, a lot of them, do you think come from countries like India or China looking for investments, or do they actually move into these properties when they buy them?
This has actually been quite a fundamental change in this particular market cycle. Anecdotally, sales carried out by Knight Frank, we know that the bulk of our purchasers are actually buying, at least the ones who are based overseas, are buying for use as a second home, a holiday home, or a retirement property. And when we think about what prices have done over the last 5 years, particularly in locations like the Palm Jumeirah, where villa prices today are, some 220% higher than they were at the last peak in 2017 for the Palm Jumeirah. People are paying record prices, and we know that they are spending almost the same amount again on refurbishing these properties, which gives us a very strong indication that these individuals plan to use these homes themselves because of the heavy level of customization. Your second question around who is actually purchasing at the moment is slightly more challenging to answer because that data is no longer available from the Dubai Land Department. However, the way I can answer that question is by looking purely at Knight Frank's sales, so sales that we have done as a business in Dubai. And for us, last year, the biggest buyers were actually Emirati nationals. In second place, we had buyers from the UK, followed by buyers from China, then India, and then France. So together, nationals from these 5 locations accounted for 54% of our buyers. And in the remainder of our top 10, we had buyers from Russia, from Ukraine, from the US, from Iran, and other locations in Europe. So if we look back historically at who's been most active in the market, it would probably look pretty similar to this. But for us, the kind of standout trend at the moment is the return of buyers from China. Of course, China was one of the last locations in the world to ease its COVID travel restrictions, and Chinese nationals had emerged amongst the top 5 source markets for tourists to Dubai. And we've seen that come back very strongly. We've seen Etihad and Emirates, for example, resume the same level of flight frequencies to points across China. They achieved that towards the end of last year, and that itself is already facilitating greater cross-border investment. In fact, about 6 or 8 weeks ago, we entertained a delegation of over 30 Chinese investors who had flown over explicitly with a view to making a real estate investment in Dubai. So that interest is coming back, and it's coming back strong.
If we just focus on the commercial sector, Faisal, in Dubai, do you have any views on the office sector in Dubai? Like, is it booming or is it doing okay? Or what are your thoughts?
Sure. I mean, look, as an analyst, we don't often use adjectives to describe market performance, but right now, Dubai, alongside Abu Dhabi, Riyadh as well, and maybe to a lesser extent Jeddah, are pretty anomalous on the world stage in that these are locations where we have virtually run out of prime grade A office space. And what that means is that we are seeing a significant amount of upward pressure on office rents. If we think about occupancy levels for offices in these cities, we're talking 95, 96, 97% plus. We've got some of the best buildings in Dubai that have waiting lists that extend hundreds of thousands of square feet, which is how you measure office demand. And actually, if we think about the reasons for that, there are a couple of things that are driving this. One, we've had a very limited amount of new office space delivered into the market over the last couple of years. In fact, between 2021 and 2023, Dubai had just 1.2 million square feet of office space that was completed. And looking ahead at our own forecast between 2024 and 2028, we're expecting just 4.2 million square feet to be delivered. And this includes Aldar's recent announcement of about 950,000 square feet on Sheikh Zayed Road, adjacent to the DIFC, plus the DIFC's own 1 million square foot DIFC Square development. And actually, even within that 4.2 million square feet, you're just talking about three or four very large developments, and a lot of that has already been pre-leased. And this is quite a new trend in the market in Dubai, and it's being driven by the fact that businesses know they need to commit to the space now, or they risk hurting their own expansion plans in the future. And we carried out a piece of research by surveying some of the biggest commercial real estate leaders in businesses across the UAE and Saudi at the end of last year, and we asked them about their sort of future occupancy plans. And over the next 3 years, 57% of them forecast that they will need larger space. 50% of them plan to grow the number of offices that their businesses have at present. And actually, about 41% of them are telling us that they're going to have to house more people in the existing offices that they occupy because of the lack of space available in the market generally. So we have quite an interesting trend that's playing out right now.
And just sticking with Dubai for a second, I think is it the D35 strategy? Could you talk a little bit about that and what the Dubai government is doing to address some of these real estate challenges you mentioned?
Sure. So the government's strategy is called D33, and this is a $8.7 trillion economic transformation plan that is expected to culminate in 2033, when Dubai celebrates its 200th year since it was founded. And there are quite a few significant highlights as part of D33. One is to double the size of the economy, double the level of foreign trade, position Dubai as the fourth largest financial center in the world, behind New York, London, and Singapore, and crucially overtaking Hong Kong. And as a part of that economic transformation plan as well, the population is expected to rise from 3.7 million today to 5.6 million. And of course, further to D33, we've got the 2040 Urban Master Plan, which envisages the population of the city approaching 7.8 million in the next 16 years. So there is a significant amount of investment that is expected to take place as part of these two initiatives. Some have already begun to be rolled out. For example, the decision to expand Al Maktoum International Airport to make it the world's largest on completion, the decision to treble the number of metro stations in the city, and of course, the recent 300 billion dirham announcement of the new storm drainage network that will cover the entire city. So we're seeing that already starting to play out, which of course is going to contribute to economic activity, job creation, and again, create more demand for offices.
No, for sure. They're looking to ramp up their infrastructure and try and, attract more people to come to the Emirates. Faisal, if we just shift a little bit to Abu Dhabi, the capital of the UAE, they themselves have also tried to, develop their real estate market. And every week I'm reading an article saying a new asset manager set up an office in Abu Dhabi. And recently I went to the Abu Dhabi global market after about 5 years, and it's just incredible to see how much it's changed in the last 5 years. Do you have any high level thoughts on the current state of the real estate market in Abu Dhabi?
Sure. Abu Dhabi has emerged as a regional hub for hedge funds, as you pointed out, and that's led to the decision to double or treble the size of ADGM, which is an incredible achievement in itself. And similar to Dubai, prime grade A office space is in short supply. That is putting upward pressure on rents. There are limited options available for those that are choosing to expand or new businesses that are entering the market. And on the residential side, it's a slightly different story. We see that residential values have remained relatively stable for the last 6 or 7 years. And what that means is it has encouraged people who have been historically renting to transition from being tenants to homeowners. And of course, the fact that Abu Dhabi residential prices are about 30% cheaper than Dubai has also played a big part in that transition. And one of the most interesting things, I guess, for the Abu Dhabi market has been the rise of international buyer interest. Historically, that has been relatively low. We know, for example, for Aldar, the proportion of international buyers of their stock was about 3% a couple of years ago. And last year, that jumped to 28% of all of their buyers being international buyers. And when I say international, they are non-resident in the UAE. So that international appetite is growing. And also in our recently published Destination Dubai report, where we investigated global demand for real estate assets in the UAE with a specific focus on Dubai, we found that there was a little under 400 million US dollars of potential private capital waiting around the world, ready to be invested in the real estate market, specifically residential real estate in Abu Dhabi. And that actually compares, that I know that is a significant sum of money itself, but for Dubai, the figure was $4.4 billion, and that was actually up 76% year on year. So that demand for assets in Dubai significantly higher than it was last year, but it is also climbing for Abu Dhabi.
And the clientele, Faisal, that buy properties in Abu Dhabi, the profile's a bit different to Dubai, right?
Historically, it has been. Abu Dhabi tends to attract more families than Dubai. And there are definitely more Emiratis that are active in the Abu Dhabi market relative to Dubai, yes.
And is that the same for commercial as well? In the commercial space, is it similar story or?
For the commercial office market, historically, the Abu Dhabi market's been driven a lot by public sector entities or quasi-government entities in the finance sector or oil and gas specifically, but that is starting to change. We see more activity from companies in business services, obviously finance and banking, as well as we talked about earlier, and companies as well connected to the industrial and logistics sector that are now active too.
Yeah. Faisal, one thing that's interesting is that about a year ago, I wrote an article for a publication about the other Emirates. Obviously, in the UAE, there's 7 Emirates, and Dubai and Abu Dhabi take up the attention from when most people look at the UAE. But there are other Emirates in the UAE, and one of them is Ras Al Khaimah. And it's been really interesting to see what they've been trying to do. Trying to attract more tourism and trying to get more people to come. And I think there's talk of them building the first casino in the UAE. Do you have any thoughts on the real estate market in Ras Al Khaimah?
Yes, the market in Ras Al Khaimah is quite fascinating. I mean, look at the sort of rugged mountainous landscape of Ras Al Khaimah stands in such stark contrast to the skyscraper-filled skylines of Dubai and Abu Dhabi, and it is that sort of geographic USP that the government of Ras Al Khaimah has capitalized upon. We know that there has been a big focus on extreme sports, for example. We've got the world's longest zip line in Ras Al Khaimah, which helped to draw global media attention to it when that was opened. But of course, the decision to build the region's first casino there has also caught the attention of international buyers and investors. The Wynn Resort that is now under construction will have 1,500 rooms, and on completion in 2027, should have the UAE's and the GCC's first casino. And when we carried out our survey of global high net worth individuals to try and understand their appetite, attitudes, aspirations towards investing in the UAE, what we found was 64% of them now view Ras Al Khaimah more favorably as a real estate investment destination purely because of the decision to allow that Wynn Resort to open its doors. So it shows the impact that the Wynn Resort is having on the appeal of RAK as somewhere to invest. And when we tried to get a gauge of the potential pool of private capital that would target real estate in Ras Al Khaimah, what we actually found is it was only 5% lower than the amount that we were able to uncover for Abu Dhabi, which shows you just how quickly Ras Al Khaimah has risen up the ranks in the minds of the global wealthy as somewhere to purchase real estate.
Yeah, no, it's interesting. You see like a lot of social media and influencers now going to Ras Al Khaimah and saying, talking about the tourism there, and like you mentioned, the extreme sports and the hiking. I think the hiking is very big in the Emirates over there, and no, there's definitely a lot of opportunities there. Faisal, I just wanted to transition to the more bigger economy in the region, which is Saudi Arabia. I know you've been on other podcasts talking about Vision 2030 and how real estate's place within Vision 2030. Maybe you could tell our listeners, how important is real estate within Vision 2030?
The real estate market for Saudi in the context of Vision 2030 is one of the key pillars. And one of the key pillars of Vision 2030 is to ensure the provision of world-class housing for Saudi nationals. And ever since the National Transformation Plan, which has been designed to help transition Saudi away from being heavily reliant on oil revenues, we've seen about $1.3 trillion of real estate and infrastructure projects that have been announced or revealed over that period. And we're moving so quickly from all of these announcements being visions or aspirations to it quickly turning to reality. Of that $1.3 trillion, we've got about $250 billion worth of contracts that have already been awarded. And as part of that pool of $1.3 trillion, we know that there are 660,000 plus residential units planned. We know there's about 6 million square meters of office space planned, about 4 million square meters of retail space, and about 320,000 hotel rooms planned. And all of that is due for delivery by the end of the decade. So real estate generally is a significant component of Vision 2030. And on the residential side, the government would like to raise the rate of home ownership to 70% among Saudi nationals by 2030. And at the moment, we're sitting at about 62%. So we're well on our way to achieving that level of home ownership. And this has been facilitated by various government programs that have been established to allow access to more affordable financing options, more affordable property options, and that has been fueling demand for real estate, particularly on the residential side in Saudi.
No, definitely. When I looked at Vision 2013, 2016, like as you said, like homeownership was a big goal of Mohammed bin Salman's vision. But when we look at the real estate market, Saudi is a big country compared to the UAE. I think in a report you wrote maybe last year or this year, you talked about this. It's mainly concentrated in three areas. So Riyadh, obviously the capital, Jeddah, and then Dammam. Like, are there differences between the three of these?
There are, and you're right, that this is where the bulk of activity is concentrated. I mean, Riyadh sits at the epicenter of the economic transformation that is underway right now. This is where we see the bulk of job creation. This is where we see the highest levels of demand for real estate, residential real estate from Saudi nationals. And to give you an indication of that, apartment prices in Riyadh, for instance, are up by about 60% in the last 3 years alone. And clearly people's incomes have not risen at the same rate, which is creating affordability challenges, which is a separate issue in itself. And over the last 7 or 8 years, we've also seen a great deal of internal migration taking place. So for the first time, young single Saudis moving around the country in search of better employment opportunities. Typically, that is in Riyadh. And actually, a lot of these individuals, when they arrive in cities like Riyadh for the first time, their focus isn't necessarily on purchasing a home. It's more on renting one, whilst they find their feet and decide if they're going to stay long term. So there are some very interesting dynamics at play in Riyadh. And of course, the rate of job creation being so high in Riyadh and the attraction of young Saudis to Riyadh has had implications for markets elsewhere in the kingdom, because demand has been reduced as a result of that. But we have started to see that change. We've seen more what we call giga projects announced elsewhere in the kingdom, which is resulting in more jobs being created in cities away from Riyadh. We're seeing some reverse migration as a result. We've got anecdotal evidence of that. But for now, Riyadh definitely remains the hub of activity, the most expensive place in the kingdom to own an apartment or a villa for the time being. But I think aside from these three cities, where we also see a lot of pent-up demand is for the holy cities of Mecca and Medina. In fact, when we published our Destination Saudi report earlier this year, which focused on understanding global demand for real estate assets in Saudi, we focused our attention on Muslim high net worth individuals because we felt they might have a greater affinity or a better understanding of investing in the kingdom. We found that 82% of them were actually keen on owning residential real estate in Saudi, and their number one city of choice was Mecca, followed by Riyadh, and then Medina. And some of these individuals have pretty deep pockets. I mean, what we found is they have an average budget of about $4.7 million to purchase real estate in the holy cities. And of course, this is hypothetical pent-up demand, because the legislation hasn't yet changed to allow international buyers to access the market readily or perhaps easily. But we did see a change earlier this year with the introduction of new premium residential visa options. And one of them is actually connected to property ownership. And I am not a lawyer, but the wording of the visa requirements tends to suggest that individuals can own multiple properties, but they've got to be worth at least 4 million riyals, and they cannot purchase something off plan, and it cannot be mortgaged. The property needs to be owned outright. So the market has opened a little bit. The taps have begun to turn, but it is right now appears to be focused specifically on the super rich, if you like.
Definitely, I think that Saudi's been doing a lot over the last, say, couple of years, well, the last 5 or 6 years to try and improve the business environment. But Faisal, one of the things I wanted to ask you is that I don't know when was the last time you went to Riyadh, but it has its challenges, right, in terms of infrastructure and transport. I mean, getting around Riyadh is not as easy as it is, say, Dubai or even, say, like somewhere like Doha, for example.
Well, I was in Riyadh just before the summer, and we've got a population that's approaching 8 million, and the expectation is that we'll be closing in on 10 million by the end of the decade. And with the volume and quantum of real estate developments that are planned, not just for Riyadh but around the country, clearly there are challenges, there are opportunities as well. One of them being around, how do you deliver such a large volume of real estate on time, within budget, and to a high standard? And we see pressures around the cost of construction materials. We see pressures around the identification or recruitment of talent and labor. And there are ways that we can perhaps try and address that. One of them we call modern methods of construction, or MMC, and this involves everything from 3D printing to offsite manufacture to modular housing. And granted, today the cost of labor in the Middle East, broadly or generally speaking, is lower than elsewhere in the world. But if we were to mix some of these modern methods of construction with traditional construction methods, we could alleviate some of these pressures that you outlined earlier, and any savings could potentially be passed on to future buyers. Because, as I said before, we are in a situation where it appears like affordability is starting to bite. House prices have accelerated over the last 3 or 4 years. Obviously, mortgage rates have jumped in line with interest rates. Today we're talking interest rates in excess of 6%. I think the last time I checked, it was 6.25% was the interest rate in Saudi. And 4 years ago we were sub 1%. So the cost of borrowing has risen, which means people are having to save for a lot longer before they can transition from renting to owning. So I think that there are ways to address some of those challenges, but they probably create quite a good opportunity because, again, if we think about the scale of what Saudi is trying to achieve, the country has a real opportunity to be a world leader in this space when it comes to things like modern methods of construction.
And moving just to the commercial sector, there's been a lot of talk about Saudi trying to get foreign businesses to, be based in the kingdom. They passed this decree that Middle Eastern headquarters had to be based in Saudi. And there was a lot of talk about King Abdullah Financial District. Do you have any thoughts on the commercial real estate market in Saudi?
Sure. So the office market in Saudi, particularly when it comes to Grade A offices, is very, very similar to what I described earlier for Dubai. We haven't got enough prime Grade A office space. I mean, in Riyadh, the average occupancy level for Grade A space at the moment is 98%. Across in Jeddah, it's 93%. And even when it comes to Grade B offices in Riyadh, we're up at 91% occupancy on average because businesses are being left with little option but to consider space that is perhaps less than ideal. And when it comes to Program HQ, which you referenced there, which is a government program designed to attract businesses to hub out of Riyadh, that has undoubtedly played a part in boosting demand. But somewhere like CAFT, which today is, by the way, fully leased, and whatever buildings have not been released yet are already committed, has about 10 million square feet of space. And in order to accommodate just the private sector, the public sector or businesses connected to the government, we probably need another one or two CAFTs to accommodate that level of demand, especially in light of kind of a general global swing by businesses towards prime grade A offices. Businesses, want to occupy best in class space because of the links to talent attraction and retention. And we're seeing the same story playing out in Riyadh today.
As we bring the podcast to a close shortly, Faisal, there was a couple of areas I wanted to ask you about. Obviously, earlier this year we had, quite adverse climate risks which took place across the region, and on social media there were things like the floods in Dubai. How important is ESG or climate becoming in the real estate sector, or is it still like as important as it was, say, a few years ago?
I think, look, the rise of importance of ESG is very, very apparent in the real estate market. And to your point about the unprecedented rainfall totals that we saw earlier this year in Dubai. I mean, we're talking of around 200 to 300 millimeters of rain falling in less than 24 hours. And the speed at which the city recovered was pretty remarkable. I'd like to see other cities in the world respond as quickly and as well as the government of Dubai did. But that aside, ESG, I think the way in which it's manifesting itself in the real estate market in the first instance is in the office market, where, as I've said a few times now, businesses have a laser-like focus on prime grade A space. And that's, yes, that is partly because of the links to talent attraction and retention, but also a lot of global businesses now have global mandates to occupy ESG rated space, so buildings with green credentials. So whether we're talking LEED or BREEAM or a Wired Score certification or a WELL rating, businesses are willing to pay a premium to be in buildings such as these. And this is why we're starting to see some of the best buildings in cities like Dubai commanding a significant rental premium when compared to other buildings. This is something that is important to the next generation of the workforce, and we're not yet necessarily at the stage where an employee decides to turn down a job offer simply because the office space being occupied by that business isn't green enough, but it certainly is becoming a consideration. And we're seeing a top-down driven approach from the government driving us towards net zero targets. The UAE leading the charge for that in the region. But right now, the challenge that we have is we simply don't have enough internationally accredited green rated buildings around the region, which is something that global investors are hungry for as well. And I know this is a slight tangent on this, but globally, investors are hunting for ESG rated office stock. And traditionally and historically, the Middle East hasn't attracted the same volumes of global investment into real estate as we see other locations around the world. And there are reasons for that. We don't necessarily have assets of scale. Our lease lengths potentially are a little bit shorter than they're accustomed to. And of course, there is the relative issues around data transparency, where data is much more readily available in other markets around the world than it is in the Middle East. But if we were to deliver greater quantities of internationally recognized green assets, I think we would pave the way for greater volumes of international capital flowing into the region.
Do you think one of the ways to address that is to have a more like rigorous or more rigid taxonomy?
I'm not necessarily convinced that may help. I think what we're seeing now is businesses are dictating what kind of space they need. And we are starting to see developers responding to that. And I think it's going to play itself out perhaps in a more organic way, but without a shadow of a doubt, businesses are acutely aware of the benefits of occupying ESG rated space. And like I say, developers are starting to respond.
And other risks or challenges do you see to the real estate market? I think you've alluded to this about interest rates and the cost of capital. So, right now, I think interest rates may come down in September. I think the Federal Reserve held rates last week. But where do you see rates going? Do you think that's going to have an impact on the market?
Look, undoubtedly, yes. I think we all hope that interest rates will continue to trend downward over the next couple of years, but I would say that downward adjustment is likely to be slight rather than significant. And the I guess the one risk that is directly connected to interest rates is the conflict in the region, which I don't necessarily want to talk about specifically, but we know that anything that has the ability to influence oil prices upwards can pose risks to demand for real estate. For example, for every 10% increase in oil prices, we know there is a subsequent 0.5% decline in global economic growth. And in parallel to that, there is a 0.4% increase in global inflation. Whenever we've had inflationary spikes in the past, the go-to lever for central banks around the world has been to bump interest rates. And if interest rates go up, it makes it not only more expensive to borrow to purchase real estate, but it makes it more expensive to borrow to build real estate. And therefore, that can have an impact on demand generally. But aside from that, for us, the number one risk to real estate markets is the threat of a global economic slowdown, recession, or a soft landing, depending on what you want to call it. Cities like Dubai are global hubs. It is influenced by what happens elsewhere. If there is a global slowdown, which has been predicted ever since the start of the pandemic, but hasn't materialized, then it will definitely impact our market. But we are in a US election year. Historically, we have not had recessions during the US election cycle. So perhaps we are safe for 2024.
Now, it sounds like you're quite bullish on the rest of the year, right? You're quite bullish on both Dubai, Abu Dhabi, and Saudi for the rest of the year.
Yes. I mean, look, if we take a look at some of the fundamentals, particularly around supply and demand, cities like Dubai, we're simply not building enough homes. The demand from overseas investors is continuing to grow. It isn't even stabilizing yet. House prices in Dubai, yes, we have all seen the headlines of the double-digit percentage growth recorded in the last 4 or 5 years, but we're only about 2% higher in terms of average residential prices in Dubai today than we were 10 years ago at the last market peak. So we've literally just crept up above our 2014 peak. And generally speaking, across Dubai, residential prices are about 400 to 500 US dollars a square foot, which is significantly more affordable than it is in many other global cities. And I'm conscious that I'm benchmarking against other cities around the world. But even when we take a look at Dubai's affordability to people who live and work in the city today, where we have analyzed the number of years of salary you need to save to be able to purchase a home in every neighborhood in the city, which we call an income multiplier, it sits roughly somewhere between 3 and 10 years of saving all of your income to be able to buy a home in virtually every neighborhood in Dubai. And globally, the threshold for what is considered unaffordable is about 6 times your annual salary. So broadly speaking, the city today is still very affordable to those who live and work there. But look, as I said, there are risks. There are risks around interest rates going up. And I guess the other one to probably point out is, in response to the exceptional levels of demand for real estate, we've seen developers in the last couple of years responding with a plethora of new off-plan residential projects. And these have been snapped up quite quickly. We've all seen the stories of queues of people wanting to buy product off-plan. But the question is, what happens in 12 months, 24 months, when some of these projects start to get handed over and the purchasers decide to refinance, because inevitably some of them will refinance. To buy something off plan, of course, you have to put down a cash deposit. You cannot secure a mortgage for off plan residential real estate in Dubai. So are these buyers going to move in themselves? Are they going to flip them? TBC. But for us, that is a risk that we are keeping an eye on. But right now, purely looking at the supply-demand fundamentals, we need about 70,000 homes per year to be built for the next 16 years to accommodate the population projections of the government. And right now, that figure sits at 43,500 homes for the next 6 years. So we are underbuilding. And please don't get me wrong, over the next 16 years, but before the population hits 7.8 million, we will have gone through one, if not two, full property market cycles. But right now, looking at demand and supply in isolation, as I say, we're just not building enough homes.
Fair enough. Faisal, tell us more about any projects you're working on or any upcoming projects you're working on.
Sure. I think the sort of key ones to keep an eye on would be Destination Qatar, which we're going to be launching at the end of September. This is a big piece of research that we've carried out in trying to investigate how Qatar can position itself as a regional travel, tourism, and investment hub. And the second piece of big research, another flagship piece of research that we will be launching next year, will be our Saudi report, which we publish every 2 years, which will be taking a closer look at demand for real estate assets in the kingdom amongst Saudi nationals themselves.
Fantastic. And Faisal, how can people get in touch with you and your research?
Sure. Look, the best way to get in touch with me would be to either look me up via the Knight Frank website and drop me an email. You can look up my contact details at the back of any of our Middle East publications or Africa publications, or indeed feel free to ring up any of our offices in the region. And of course, you can get me on LinkedIn too.
Fantastic. Faisal Durrani, this has been a great conversation, and I wish you all the best for the rest of 2024 and going into 25.
Thank you very much for having me, Hassan.